All right, welcome to the Nightly Strategy Podcast for January 13th, 2022. So today we had a rejection of yesterday's gains. So when we take a look at the long, strange trip we've been on, we started with this harsh sell-off from the 10-day high to a new 10-day low. That reversed intraday for a strong upward move, which continued for 2 more days, but terminated yesterday in this little doji looking action where we had half the size of the previous day's range. The close was slightly lower than the open, and it was stuck right in the middle of a descending dragon. So we're ready to treat that as a critical state and trade to the upside and trade to the downside, whichever way that went. And then we talked about what to do when you had if you had a gap. And so yesterday's quick impromptu lesson talked about exactly this case. What do you do when there's a gap up and it starts to reverse? Well, when it came back through this yellow sideways range that we had programmed, that was a signal to get short. Across the dragon belly, you've got more than a frog box move from here. You're allowed to get short right there. And then a strong directional down move through the bottom of the dragon, through the Bollinger Band mean, below the baby dragon, all the way, almost all the way to the Z1, and even went down and tested the previous belly of the dragon. So we are poised tomorrow for a sharp downward move if that 1-day low violates, because now you're going to have a collapsing dragon off the dragon here. You're a short distance away from the RL10, a true collapsing dragon. You've got the 3-period hull is down strong. The slope of the 30 went negative today. We're being pushed down also by the declining PSAR. The slope of the dragon is down. So there's plenty of evidence to suggest that there's more short-term pain in the market. You don't really even have to justify that belief. You can just trade as if it is a strong possibility, right? Now, as we're estimating the size of potential downside move tomorrow, all I do is simply take today's downside move and say, well, if we clone that, what do we get? If we get that tomorrow, it looks like this and comes all the way down past Z2 to 454. That's what just another day like today would look like if we got that tomorrow. It would come through the belly of the dragon. It would violate the RL10 for a collapsing dragon. It would break through the 10-day low. It would break through a 5% sell-off from the swing high, and then would be down here beyond the floodplain. That's what a standard trade tomorrow to the downside would look like. That would be unsurprising. And I would also note that today's price action not only closed below the Bollinger Band mean, but the dragon the RL10 recrossed the baby dragon to the downside. So you technically already have a collapsing dragon off of this violation of the belly of the RL10. So this move down was all the first leg down of a collapsing dragon. Now, the last time price was down in this region here, there was a sharp reversal move to the upside. So that's all I need to see to be able to tell me, yeah, the upside move back into the dragon or to the edge of the dragon is certainly there. And a strong move to the downside is certainly there. So this creates the critical state around that real tight compression range. What I would like to see, like I briefed yesterday, is a nice orderly move. I thought I had that just a second. Well, yesterday we talked about how to trade that as a orderly move out of a tight compression. So review yesterday's lesson if you need more guidance on how to treat the opening with a hybrid frog to take advantage of hybrid frog trading during periods of when the market is in a critical state. So that's what we have tomorrow. Large move in either direction is certainly possible. Let's look at the sectors performance today. So today we had the S&P down 1.4%. Emerging markets gave up their 2-day exceptional run. And we looked at that yesterday as a special case that if it didn't continue to follow through what was available, and we started getting that reversion to the mean after an amazing 2 days. So the emerging markets trade was certainly there. Treasury or the Qs were the worst performer at -2.5. The Russell was slightly better than the S&P, down 0.9. Diamonds down 0.5. Only treasuries were in the green today, plus 0.9 to close at 144. So still some defensive play action available in treasuries. There's only a few sectors better than the market today, so let's look at those real quick. Oil, blended commodities, wheat and precious, and marijuana, all losing between 1.1 and 0.9. Materials a little better, 0.78, minus 0.78. Agriculture, minus 0.56. Energy was in the red, but still outperformed the broader market today, minus 0.5. Finance, minus 0.39. Brazil and Mexico, we looked at those yesterday as exceptional performers. They still are outperforming the S&P today, although they were slightly in the red. Now we start getting into the green with consumer staples, 0.18. Wood, commercial real estate, and the other lumber up between 0.5 and 0.8. And then finally, VXX, the volatility ETF at 6.3. Targets that were better, John Deere 1.1, Devon Energy down 0.52. So there really wasn't much to pick and choose from as far as pure upside holding, but there were some long side trades that worked, but very few areas that were in the green today. So lumber, I would still stay with a stalking Mexico and Brazil, finance and energy. That all is still looking good. And even materials, although the steels didn't follow through today. All right, let's take a look at the downside. Downside sectors. Oil exploration off 2%. Consumer discretionary 2%. Bitcoin and S&P biotech down 2.5%. Lithium tech down 2.6%. Blockchain 3.3%. Clean energy and the FANGs down 3.5%. Moonshots 4.125%. ARC Genomics, Bitcoin Trust, large cap blended crypto, ARC Innovation 5.5%. Ethereum off 8% after yesterday's plus 10%, so quite the ride there. Individual targets that underperformed, Virgin Galactic dramatically off 19%. They can't be long for this world. Tesla off 6 3/4 to close just a fraction above 1,000. So, Tesla is just a trade right now. I mean, the religious mania associated with them, I just feel like that has to be done with. You have to just treat that as a trading vehicle within well-defined boundaries, as there's more and more evidence of psychological conditions leading to buying and selling. So the uninhibited enthusiasm for Tesla, I feel like, is over. And you're starting to see a lot of news articles about real competition, comparing them against Ford and GM and Volkswagen in the electric vehicle space. I mean, you got to remember that the production of vehicles to the masses is what we're into right now, the industrial delivery. There's 30 million electric vehicles on the road. There's 1.6 billion internal combustion engine vehicles on the road. So the ability to scale for that 1.57 billion vehicles, looking to see how those large manufacturers who have scale, how they're going to convert into the electric vehicle market. That's a huge issue beyond the religious mania associated with Tesla. Squarespace, Robinhood, the financial disruptors were off big, along with the loss in cryptos. They're down 5.8. Microsoft got smoked at 4.25%. So if you stuck around after the formal briefing yesterday, my brother and I were talking our way through rehearsing some moves in Microsoft. I want to show the follow through of the trade frame that we put together. And he better have gotten short on that one, or I'm going to flap to Michigan and beat him up. Cliff Natural Resources, 3 3/4. PayPal off, just like the other disruptors, and Coinbase. TX, Alcoa, and Apple all down 2% or more. US Steel down 1%. So the steels were down large. Notice the strong number of symbols that are in the red on daily winter. So we are definitely in that season. There's only a handful of things that are in the daily summer. Metals, oil exploration, emerging markets, U.S. Steel. So we're starting to be dominated by the daily winter column here. So we need to protect your capital in this market. Let me know in the chat if you found that helpful. So yesterday, in the after the session impromptu framing, if you will. So my brother and I were looking at the Microsoft trade. So this is what we looked at yesterday. We saw that Microsoft had sold off, and we considered it to be in after this little gap up, it then sold off, and then was pretty much flat all day, and then finished the day below the VWAP, right? And so what we set up was this tight little risk box, and we said we got to be prepared to go strong this way or strong that way. All right. And what we said was we wanted to see, we would wait to see it break above yesterday's VWAP before we got that second position in, and then the third position if it broke above the high of yesterday. So our first position would be coming out of this yellow box, second position, third position, before we felt really confident about it. By the same token, we said it could fall out of this tight range box here easily. And then if it broke below yesterday's VWAP, that's where we would want to really pick up that extra position short. And then if it broke below the Z3 excursion from yesterday, that would be a statistically significant level over here. And that's where we would pick up even more. So then when you look at what the follow through actually was, you get this kind of a move. And so what he better have gotten was, there was initially a gap up in your hybrid here. Your hybrid frog might have tried going long, but then when that fails, you should be short back to here, picking up more shorts in here, probably covering here. And then on this collapsing dragon, getting that move. And then if you were still around, you'd get large on that move. So the move down in Microsoft that we saw went even farther than the southern tip of the Z3 excursion. She really got 3 legs down, 1, 2, and then 3. to close weekly today on a 4.5% sell-off. So even tech darling Microsoft was getting smoked. So short-term tactical trade framing based on support and resistance, the RLCO framework, the RLFF framework. This is an example of the multi-time frame, multi-lens analysis that we teach in the foundations course, and which we employ regularly in day, swing, and core trading. So I wanted to just follow up for those guys that stuck around to listen. Let's see. So this is one that Ken H. sent me as a result of the, we were looking at one of the development of potential. And one of the things that happens is that this is from Atomic Habits by James Clear. And so when you invest time and effort into acquiring the skills and getting the stick time and learning to discipline your monkey and whatnot, you feel like there should be a nice, smooth, orderly, linear rate of learning. But what actually happens is that you get, there's sort of a sunk cost of learning the new skills that you learn slower than you think. And then when we looked at this yesterday, we said, hey, that feels like the first 600 to 1,000 trades. That's what it takes to start building up that latent, tacit knowledge of experience when, and then you see it starting to pay off, like in the trading results that Ken H. and Luke have put together, and Kim Anderson and others, that that's typical of that human craft knowledge learning curve. So the work is not wasted, as Clear points out. It's simply being stored, and that the payoff is later. That's also what it looks like when you plant seeds. It takes time to germinate, and then you get in the springtime of that plant is when you get that. You finally get that explosive growth. So I wanted to share that. We love that book, Atomic Habits by James Clear, and this is a nice summary, fair use of that. Yeah, the same idea of the lose 100 games as quickly as possible to start building proficiency. Okay, all right. Let's shift to the daily report, and then we'll get to the charts of interest. All right, going to dashboard number 1. Bullish normal conditions. We've sunk into oversold and low neutral on 2 and 10 day. The risk Z is still reminding us that the upside has potential. I got to go back and fix our little hot link. Got a little screwed up in there. Not to worry. Want to shift to the Latin American EEM, still showing potential for weakness on the downside. Walmart, Caterpillar, 3M, Coca-Cola, JP Morgan. These are conventional consumer staples kinds of companies, whereas your tech winners like Microsoft, NVIDIA, Tesla, Netflix are in the 10-day suffering categories. Just one doji today in the Dow 30. Plenty of auto framers starting to come online. Microsoft and Nike still attractive there. In the ETFs, handful of dojis today. Plenty of auto framers to choose. Clean energy, still strong candidate to to get short on at the first sign of weakness. That's the most reliable short there is right now, as there's no appetite for slinging more money at that from the public trough. Materials had a bit of a follow through of strength today. Energy continues to dominate. In the auto framers, I'm liking real estate still. And, to be honest, Microsoft, I'm always stalking them after they've sold off 4.5% in a day. I don't know that tomorrow's the day that they get fixed, but Microsoft is definitely in play. And once it stabilizes, it should be setting up well for an SSC. Tech and the Russell above 2-1. Today's range was large enough that there's no candidate in our stack that is squeezed enough to give us 2-1. And when you see the S&P near the top of that, that tells you that the rest of these targets were all getting smashed as a broad phenomenon of volatility to the downside. Starting to see more winter creep in, fewer and fewer summers. The ones I would highlight, strength is still in energy, finance, metals, and materials in the summer. Coke and Caterpillar and Walmart. That's part of the reasons why XLY was good today. Excuse me. Had some troubles with the spreadsheet today. So we're going to go straight to the charts now. I'm going to try to get that fixed and resent out, but you got the primary actionable signals for tonight. All right, for the SSC Kata challenge, just notice that we should be. Here's a winter, and there's an SSC, and there's a Kata 2. We should be on those. When this rolls over, we want our exit 1, 2, 3 exit would be here. PSAR exit would be there. Crossing the Bollinger Band mean exit would be there. We could be short here if we wanted. This is where the collapsing dragon entry would be hit after this. That's where the short would be. And then if you take this as a belly of the RL10, you could be collapsing dragon short here. So 1, 2, 3, 4 big trades were possible. This is a good SSC. That's a good cash. Now, after the magnitude of that move, I'd be really tempted just to cut this one right here. But the rule set does say wait for the PSAR flip. So that's executing properly. This is now the SSC. In the real world, once you get out of the kata, if you've got that much in hand and you let it scratch, don't do that. Get paid on a 1, 2, 3 when it crosses the VWAP or departs the dragon. Don't let a trade like that, which is more than one R, go to a scratch. Let's see. I thought we had a rule in here about if you had an R in hand, what to do. I guess not. All right. This one also, here's a kata 2. And he correctly, according to the rules, takes the PSAR. So don't, in the real world, once you learn the discipline of the kata and you are getting paid, get paid. And then here's a kata 2. We should be on that one with an exit here. This would be a kata 2 to the downside because you have a high, a lower high, and then a collapsing dragon would be here. This would be the kata 2 entry. This would be the collapsing dragon entry, and then you get all of this. This is a legit kata 2 entry, good 1R loss. This is the collapsing dragon. You get all of that. Good kata 2, unfortunate, good re-entry and exit. So you're executing the rule set reasonably well. Now take a look at what the rule set prohibits you from taking and learn to start recognizing these other patterns too. And so that's one of the values of the kata, is it clarifies exactly what the rule set gets you, and then you can decide to explicitly add to rule sets as you go. That's the value of learning by means of a kata. All right, U.S. Steel. We got this rising move. Here's the open. This little sell-off and breakout PSAR flip. We should be on that with a, excuse me, hybrid frog box with either a 1, 2, 3 exit or a RLXD exit or a PSAR exit. We should be short in here or short when it crosses the VWAP, and then collecting a 1, 2, 3 exit. This is a great entry. 1, 2 R in hands, 3 R in hand, gave back a full R. When you're more than 2 R in hand, take the PSAR. This should now be our short when it crosses the Bollinger Band mean, with the second position on crossing the VWAP and a Z3 pinch breakout. We should have 2 short in here, and then using that as our exit, then that's a legitimate shot. Now, after a move like that and the whole market getting smoked, and this doesn't immediately take off, and it comes through the dragon, get an exit here instead of there. This is a reasonable PSAR entry the other way. See, this is when it works, it should work right away and get back to the VWAP. So when it doesn't work right away, cut it. Now, this initial risk box here should be up here, either at the PSAR or at the dragon. You got almost 3 in hand. That's a great exit. This is a great effort on the this was a re-entry. This is where your short should be. Or here. That's still good too. Good cover. There was not much room on this one, but I like it as a kata 2. But when this stuff doesn't work right away, you took more than a 1R loss. That should be a PSAR stop, and that's where you should be short here rather than here. Good effort. You should be short here, not here, and you should be short right there. So there's a lot more room to capture some gains on this one. I'm looking for the total. So we got +2, -1. So through 2.7, 2.9, 1.9, 0.9. So that's 0.9 for the day. This should be about 5R if we're doing this correctly, maybe even 10. That's the one we got to get. Oh my goodness. Still positive expectancy for the day. Getting paid to learn. The S&P. Here's 3R from Joe. Reasonable effort here on the open, and then trying for it. Good. See, he doesn't even let it get the full loss. He just takes it when it crosses the VWAP. We should be short here, not here, but still that's pretty good. Good cover. We should be, as soon as this doesn't go and starts to roll over, you should be short right there. It's already collapsing below this one. We should be short here and get paid to here. Then that's a nice trade. And then this is, we should be short here, not here. Or short here. So there's a strong short, a strong short. This is a Z3 pinch short, and he still gets paid 2. And he notes it's a late entry. Good. Worth a shot. As soon as this doesn't work, get out of it right here instead of all the way here. Take a half an hour on that instead of a full. And then there's your SSC. Then that gets paid. Then if you try that and it doesn't work, this should be a stop and reverse. Don't wait for that extra piece, because all you're thinking it's going to do is get to the VWAP anyway. So why wait for half the distance to be in just to exit here? So make that a stop and reverse. Good scratch, great reentry. This is where we should be short. Dude, you see all these down arrows? We should be crushing this on the short side instantly. If it doesn't immediately work when the rest of the market's getting absolutely murdered, then you should be pounding this on the short side after every time this thing rolls over. Every time these little humps roll over and don't get back to the VWAP, you should be crushing that. Price with respect to the VWAP tells you about where the primary direction of the trend is. Still, 3R going mostly long on a day that the S&P got smoked. That's pretty good. All right, here's Alcoa. Here's the Z3 pinch box from yesterday. Here's where it opens with a gap down. As soon as this crosses and breaks above the Z3 pinch from yesterday and is on the far side of the dragon rising and the PSAR is flipped, we could probably get long in here. Still, that's really good. 1, 2, 3 exit. That's great. Great short. I love that you covered this and still got paid. But as soon as that doesn't follow through and starts doing this, when it crosses the VWAP, you should be crushing that short. You should be short again right here, because when it comes up and then starts to roll over, I want to be short here, thinking that if it falls below this level, that's a huge win. Reasonable effort on the long side. Pretty reasonable exit. Little slow on the reentry. That's your entry here rather than here. Good exit. And then, oh man, I want that. And here's your SSC the long way. And it gets almost all the way back to the VWAP. So this excursion from the RL10 to the VWAP, that's the magnet that pulls it north like that. So I want both of those trades. We should be on this short because the downward direction and it rejects the VWAP and crosses the dragon. That's the one you got to murder on the downside. It's much more common to see that sharp directional move down and then see little grinding moves to the upside. This one was unusually straightforward, but it's that downside move when everybody's bailing that gives you the clearest, cleanest signals. Qs, this net's almost 6R, so that's a pretty good day at work. I love the short. We got out of it pretty fast with a scratch. I love this short, but I'm not sure why we're covering. If you were going to get out that fast to preserve a profit, then you should be getting in short right here instead of down here. You gave back an R. Got paid. I like to get short here. Good scratch. Get short right away. Good. Got paid. I love this short. I love this cover. This was good patience and got paid. Scratch, scratch, crushed it. That long, careful slide into lunch for the low of the day, and then there's your VWAP magnet trade. That's worth a shot. You got paid. I would have tried probably this one. We might have gotten paid a little bit. When that fails, when that doesn't get to the VWAP, that's where you got to crush that short. And then you get all of that move. Still, that's pretty good. 5R for the day. A little more relaxed on the and get that long slide. All right, Tom's TZA trades, trading Joe's rule set. When he listened to last night's commentary about how to accelerate his moves, because he's using 10 minutes, he's got to be like on the 1-2 entry instead of 1-2-3, instead of waiting for that full move. Reasonable effort on the long side. Should be shorting here, would get paid to here. And this could now be a 1-2-3 entry on the 10-minute. And instead of here, you would get paid, and then 1-2-3 exit. You would get paid here instead of losing that little piece. And then this one should be the stop and reverse. Yeah. So if you make the changes from last night's coaching, instead of down 3.4, it would be up 7. And that has to do with the fact that you're on the 10 minutes instead of the 1 minute. NVIDIA. Yeah, it's tough being a trader. You have to get up early, but if you want the early bird's got to get the early worm. Nice entry. SSC with a nice wrist box. Fantastic exit. Either you're short here, you know what I mean? Short there or short there would be fine. And then getting paid here is fine. Here's your SSC. Excellent cover. I'd be trying, I think, probably here when that PSAR flips instead of here. And then that's a good exit. And then stop and reverse short would pick you up an extra piece. So 0.8 to learn. Think about, your timing, and then tighten up on that one to get short. So this is a high, a low, a lower high. That's why this collapsing dragon is sweet, or a kata 2 to the downside, I should say. Here's Luke with 6R in Aussie on the 5 minutes. Keeps taking his shots. I love the short. That's probably that move was by surprise there. I might have wanted to that's about where you can get out. The re-entry was fine. Great exit. When it crosses the PSAR, he gets short and gets paid. Great exit. And 1-2-3 exit would be right there, which is what he got. Re-entry, excellent. I think maybe gave back too much on that one. It was so close to the Z3 that maybe I just take the edge of the river still. And then I think we were slow getting the short in, probably because you saw that move and you were reluctant to get in and said, man, I better. But now, of course, I'm going to beat you up on this. You had 2 pushes past the Z3, and we let it come back and gave back 80% of our gains and only made bank on this. But here's your kata 2. One, this is, I think, where you got to consider that second position, man. When all of this gets left behind and you got that move and it's rocketing, man, let's get that or this for your second one. This one, I got to wonder, after we already saw this and no follow through and decline, and then it resumes. I guess that's why that's the second position. Or that was supposed to be the exit. I think that's actually the exit. And then this one, I think, is a short, which you covered here and then got long. So the color codes are a little off, but you were there. You get that one because you kept firing, and that should be 9R if you get that second position in here or here. This is the short tech. Ken H. So this is the inverse tech. So he's playing the, he's getting long the inverse. He sees this Z3 pinch breakout, gets paid for 2. A little slow on the reentry, but still gets paid for 2. Reasonable effort. And then we missed this one. We missed the SSC, missed the Kata 2, missed the Z3 pinch, but got the Z3 pinch breakout in the Kata 2, second position scratch, but +4. A couple shots that didn't really materialize for 7, could have been 12. Still, we'll take a day when that's about a B day and making 7. All right, here's down a half on the E-minis, and this is on the, let's see, 5-minute chart. After the Z3 pinch box, this thing rolls over. I love the short. I love the scratch. Another Z3 pinch and breakout. Gets paid. That's good. Reasonable after this little chop. I love the next new high of the day trying. That should be the stop and reverse there, but that's still a pretty good short. You got paid. But if you were going to cash that one to get paid, as soon as that failed, you should be short here, not here. Then that one at least scratches instead of losing. And then I think that's a reasonable short. Now, when you see this, you can't let that one, you can't be that far in the win and give back that much and only keep this much. At least you kept it. But on a Z3 excursion, you got to at least keep half. Swing low, winter turns to spring, 1, 2, 3 entry. Reasonable. Tough being away from the computer on the move of the day. This was slow to get in. Maybe right here is where I want to be. That's still not bad. You got paid a little bit. When this fails, that's where I want to be short. And this is why. Yeah, so don't be away from the computer. It's almost like it was waiting for you. Oh, quick, he's away from the computer. Okay, give him a taste. Hey, he's away from the computer again. So this net could have been, 5 or 6R with some presence. All right, here's XOP, and he's getting a little bit of the grind in this area. That's just what happens, but he comes out of it at the appropriate spot in the right direction. This is where I would be thinking about that second position short when it breaks below the Z3 pinch. This is just a great entry here, but I want to be short 1 here. I want to add a position here. I might have cashed this and then re-entered here, but that's a nice exit on a 1 position. Worth a shot. This is your SSC. You took the Kata 2. Good scratch or good protection. But then when it crosses right away, I got to be long here instead of here. Don't worry about being comfortable. If you can't see yourself taking that exit, then cut your position size in half so that you can just follow, because otherwise you're betting on intuition and feeling instead of a mathematical computed rule. And that will cause you to then start deciding, oh, I'm only going to take half positions now. And now all of a sudden you're trading on how you feel instead of what you're seeing. So trade at a smaller size until you have great confidence. I mean, we've tuned those PSARs so that you can stay in them a long time. And when they break, it's over. So that's the reason they're tuned the way they are. So I'd like to see you re-enter here instead of here. Even so, that's a good second entry. That's a great exit. Brilliant short. Great second position because you're below you got the Z3 pinch breakdown. That's the same one I wanted to see over here. You got it this time. Great cover. These are good shots. After this first failure, maybe I'm a little faster to exit here instead of down here. And maybe I can get short here instead of down here. When this gets all the way to Z3, don't let it come all the way back to here to cover. Good work. I should be long again here instead of here. Great exit. So pretty good work for 8R. You're picking up the thread. I'm liking it. All right, that's everything from the charts. I'm gonna try to go get that reprinted for some of those error places, but you've got all the actionable ones for tomorrow. That's everything we got for tonight. We'll get this published and processed. You guys are, you're in the wood shop and you're learning to use the tools. Continue to learn. Commit to the lessons learned that you want to carry forward into the next day's trade. Pick one or two after you've done the sustains and improves. Things I did that I want to continue to do, things that I did that I want to stop doing, or things that I didn't do that I want to add. That's what we mean by sustain and improve. Then commit to one or two things at the most that you really want to concentrate on in writing for the next day. And then that gives you an accountability check that says, did I actually follow through on the things that I was committing to? And then that will detect if you are being ruthless on applying the lessons learned that you are prioritizing. Otherwise, you're just writing words on a page. So commit in writing to the changes you want to make tomorrow, and then ask yourself at the end of the day tomorrow, did I make the changes that I committed to? That's where an accountability partner can be very helpful to you. All right. All right. That's everything I got for us tonight. And we shall see you tomorrow. If you're in the sound of my voice and you're taking the Creativity 202 course, we're going to start our discussions on that one at 10 a.m. Central. We're going to start with the opening chapter with the top 10 bottom line insights from Angus Fletcher's book on creativity. And then each week we will add the next chapter. There's 30 chapters in the book with exercises for creativity, and then my exercises for creativity and trading. We're going to talk about each one of those one chapter at a time, one lesson at a time, and then build out the rest of that course with some recordings. So the first one of those is this Saturday at 10 Central. And if you're in the sound of my voice, then I'll see you then. All right. That's everything I got for you tonight, guys. We'll see you tomorrow. I gotta hit the bed. I gotta hit the sack pretty early tonight, Bob's. I got an early one tomorrow.
Okay.
Anyone?
17 in Microsoft, 12 in oh shit, who was that? Shopify.
Yep. Hey, you know,
And
you got to
then-
make those. You got to make those charts and document them and name them so that we start
I
building
know.
case
I know.
studies.
One thing I did want to do for the guys that are on here, NVIDIA, something weird happened in the off hours. This thing is now super channeled. It's like somebody went out and sold a bunch and bought a bunch all within at about 5:15 tonight. So this is an incredible super pinch. The range on it is a total of 35 cents. So something funky is going on with NVIDIA for tomorrow. It looks like a ballpoint pen or a needle. Anyway, for
Yeah,
what
there
it's
it is.
worth. You see what I mean? The aftermarket info. Kind of like that day that we saw the world shut down.
Well, that just means that there's not a lot of trading activity in it aftermarket, and so one guy that makes a big buy and sell can make it spike like that. That's sort of normal behavior.
Okay.
That's why I don't trade the individual stocks in the aftermarkets. You can trade indexes and futures and currencies fine, but the aftermarket in stocks is really hard to manage.
I just that it flattened the VWAP and it flattened everything. So
yeah.
Anyway, but again, Shopify, for anybody listening, tomorrow, it's at a 1-year low, and it's such a critical state. It's not even funny. It's a hard one to trade because it's $1,000 each, but
yeah,
you know,
it's not the number of shares; it's the dollars at risk, anyways.
Right. I'm doing like three shares at a time. So
yeah,
that's
pretty good. That there's a if you come back to this previous support level, it's go
back a little farther. Go back a little farther. Yeah, because if it breaks, it could, who knows? It goes see?
Yeah, that's a weekly chart there. Here's the belly of the dragon and the PSAR. So if you just go to where the PSAR flips on the weeklies, that is such a good mechanism for swing trades. Because you say when this one flipped,
that isn't that much.
You know, you get you get an entry, even if you're just using the crossing of the dragon on the weekly.
Yep.
You could even use the bottom of the dragon as your risk box. That would look like this.
Yep.
So yeah,
anyway,
if these two break, then look out below. Then it's coming back to 750.
Yep. It's the same thing you're talking about in Tesla, where it's a religious. Just where's the end? Who knows? And now we're starting to find it. So it can really, really tank. Or
I'm getting ready.
Still looking at you're looking at $600 if it goes.
Get ready to try a new set of headphones here. Some guys that used to work at AKG started their own company in Slovenia, and they're offering the same kind of high quality tech at a fraction of the AKG price. And see what
ended up with
like.
These Sennheiser.
Yeah.
The 559s.
Yeah, the 598s.
Well, no, I got I'm not at the same level as you, brother. 559s. $100. Awesome. Comfortable. Wore them all day. No fatigue.
Yeah, they're very light. They have a nice bright tone to them.
Monica did get back with me. We're gonna next Thursday gonna have our first official strategy and implementation meeting. So she's got the COVIDs. So
oh man, are these nice? These are called Mees or let me see what they are again. Wow, are they nice? Competitive with Sennheiser. That is really nice. Meze.
Meze.
Yeah, let me see. These are the. I think I paid $100 for them. Let me see what they are. Boy, could I recommend these? Holy mackerel!
You're not sharing your screen, so I can't see them, but that's cool. Is there a model number?
Yeah, I'm checking right now.
Oh, sorry. There you go.
Yeah, very light. There, it's over the ear, so it won't let any sound out. Man. Yeah, Meze 99s. Yeah, these I got the composite, not the walnut, so they're about $200. Boy, are they nice. That's a little less expensive than the Sennheisers. Yeah. For comparable sound for $100 less. Boy, I like them.
Yep.
All right, man. I gotta hit the road.
Get
some stuff.
Yep. Have a good night, bro.
Yep. Night.